I don't know who needs to hear this, and please let me hold your hand when I tell you this, but stop trying to buy a home with no money. And let me clarify. You can buy a home with no money down. Literally 0% down payment. Like, there's tons of programs where you can do that. I'm not talking about that. I'm talking specifically to the people who are trying to buy a home with zero money in their bank account. Like, no savings, nothing in your checking, nothing whatsoever. The issue here is going to be that things are going to come up. Maintenance. What's going to happen when the HVAC in your home goes out and you need to replace it or you need to fix it? What's going to happen when you need a new What's going to happen when you need a new roof? What's going to happen? How are you going to pay the gardener? If you have a house, how are you going to pay the gardener to mow your lawn? Like, there are things that come up that you cannot be prepared for. There are things that will come up. Even a home that has been inspected to the fullest, over time, there's wear and tear that comes with a home.
Hey guys, welcome back to the channel. I agree with 100% thus far, and hopefully you can hear what it is that she's saying. Do not buy a home if you don't have any money. And as she stated, there are programs that you can get into homes with no money out of pocket, technically. But buying a home and you have zero in your checking, savings, you don't have any money that you can tap into an investment account, a 401k. You're just going in by the grace of God. You hope nothing happens, and something is going to happen, because none of the stuff that's used to build the home is going to last forever. We're going to continue to go through these videos because it's house buying season, and a lot of you out there are looking for information. Let go.
If you live in the cold and your pipes, in the middle of winter, your pipes burst, how are you going to have the money to fix that? And the point is, you're not going to have money. You're going to wonder where you're going to get the money to fix these things. There's a term for this. It's called being house rich and cash poor. I always tell people the best time to buy is when you are financially ready and able to do so.
Let me put some numbers on that term, financially ready and able to. You're in the market to buy a home. Let's say $600,000. It shouldn't exceed 28% of your gross income. If you're at 28% or less of what we call the front end ratio, where you take the housing payment, principal, interest, taxes, and insurance, and whatever assessment fees that go with it. If you want to be really on top of it, factor in the maintenance costs, like we've taught you in the past, either taking 14 cents, multiplying it times the square footage, and annualize that number, divided by 12 and put that in, or 1% of the value of your home. If that is under 28%, well, then you're well qualified and you'll be able to handle the payment of the home. As far as your total debt picture, you don't want to exceed 33%. That can put some numbers, some benchmarks for you to determine if you are well qualified without looking at everyone's specific situation. To recap, take your proposed mortgage payment, the principal, the interest, the taxes, and the insurance, factor in a maintenance cost based upon what I just said. And if that's 28% of your gross income, you should be golden. And then when you factor in the other monthly costs that you have that show up on your credit report, that's what we look at. But if you want to be super confident about the number, you know what other liabilities that you have that aren't going to show up on a traditional credit report. Factor those in. And when you add the house payment, principal, interest, taxes, insurance, and all of the monthly obligations that you have, and you divide that number into your gross income, if you're at 33% for your total debt, you shouldn't have a problem. And I think that's how you can define financially ready or able to afford a home. Let's continue.
And I'm saying this as a realtor who sells homes for a living, but also a property owner. Like, trust me, stuff comes up.
To her point, here are some other things to have you think about costs that go into the maintenance of the home that you're probably not even thinking about at this time. How y'all living? So check it out. This is why I say you want to be, you have to want to be a homeowner. You can't do it because you think it's going to be your least expense item once you get into a house you can hide. That is a fallacy. So check it out. Got a little topsoil here, or not topsoil, but soil, because I want to put that in my sweet potato plants, right? We grow our food around here also. But that aside, you know, that's $10. This is for bug control, if you will, in the yard, because I have a lawn. And you have to put this down really every 4 months. I like to do it once a quarter, but that keeps the pests down. You either do it or you have a pest service, right? Rock salt. What is this for? This is for your water softener. I'm in an area where the water's hard. Well, why do you need to put water and condition the water? Well, that prolongs the life of a lot of the appliances and stuff that use water. These are things that you don't think about, but this is just the cost of living, maintenance. And then last but not least, I deal with the Scots. I also have some more commercial grade herbicides and things of that nature, but it's that time. So the yard needs to be maintained, the curb appeal. So if you're not ready for home ownership, that's not something you want to do. Oh, last thing, I do my own yard work as well. So this is a brand from Lowe's, but 50 bags. Every time I cut my lawn, if I'm on top of it, I cut it twice a week, but it's 4 bags that I use, and that's going in the trash for the clippings, right? So these are the things that you have to realize and understand when you're buying homes. Some things are necessities, some things are preference, but you gotta know your why. Now let's go back into the studio.
You see what I'm saying? You gotta have some money, or you have to know what type of home owner you are. You may want to get a condo or a townhome. That may be something that fits your lifestyle. Or if you're someone that's looking for the traditional 3 bedrooms, 2 bath, you have a family, these are some of the other costs that you have to be comfortable with. And in your education, the more you can do along those lines of what does it cost, what input costs go into running a house, utilities, groceries, some of the ancillary things that you don't think about, furnishing the home, dishes, pots, pans, appliances, all of those things. The more you can be prepared, the better off you'll be, and you won't have buyer's remorse. Now, I want you to watch this next professional, because I really like how he educated his clients, because a lot of you guys are thinking you're in a position to buy and you're really not ready. Let's check it out.
So I had a young couple reach out to me and say, hey, Mr. Wade, we're approved to buy a house. Can we go shopping? So I said, okay, congratulations on being approved. Where's your pre-approval letter? And they were like, well, we don't have a pre-approval letter. I was like, well, so how are you approved to buy a home? And they said, well, we received a letter from the bank saying that you're approved to buy a house. And I said, well, that's just marketing. You're not really approved. I was like, well, why would they send us that? I said, for you to reach out. So there's a difference between being approved based on that letter from the bank and actually being approved.
That's gold. I don't want to rush past it. Actually, what that's called, it's an offer to apply for credit. You might get them in the form of different credit card issuers saying, hey, you've been pre-approved for $1 amount. Those are offers. Here's a little nugget for you. If you go to optoutprescreen.com, optoutprescreen.com, and opt out of those offers, you won't get stuff like that in the mail. And I think it's really a good thing for a lot of folks, because it's less marketing coming your way to entice you to get into stuff that you shouldn't get into. Moreover, it will increase your credit scores. I've seen anywhere from 5 to 10 point increase because you're not getting inundated with those offers. And I think another benefit is you don't have all that junk mail to get rid of. So optoutprescreen.com is where you would go, so you don't get those offers to apply. But to his point, that's not a pre-approval letter. Let's continue.
So it's marketing. And what I'm seeing a lot of is a lot of people, especially young people and some older, don't understand they're being marketed to. So that letter from the bank was basically saying you're approved to buy a house, meaning contact us to do the application to see if you can get pre-approved to buy a home. And they didn't understand that. And so I was like, hey, that's what that means. Until you have a letter from the bank with an amount giving you the amount to buy a home, you're not pre-approved. And so that was a learning moment for them. But also, as I got deeper into it, I'm asking questions. Okay, are you guys really ready to buy a home?
Just to add a little more meat to the bone, the process is this. You would have to submit an application. Most people have a secure online application. That's the first step in getting pre-approved. But here is where the rubber meets the road. Most people that are W-2 employees, you're going to have some documents that are synonymous with everybody across the board. You're going to have your identification document, your driver's license. On your driver's license, you want to make sure that they're not expired. And I don't mean to laugh, but you'd be surprised at the number of folks riding around with expired driver's license. Also, you want to be able to give an explanation for the address that you have on your driver's license. Let me explain. A lot of you guys have rented or are probably renting, and maybe you have mama's address or big mama's address on your driver's license because that's where you get your mail, because you've been renting and you don't want that mail to go to those places in the event that you move. Knowing that up front helps the loan officer, because here's the deal. At a lot of these banks, a lot of these credit unions, and a lot of loan officers today, they don't know how to take an application. They didn't come up in the era in which you did sit across from someone and look at a IRLA or a 1003 and understand what each box means. You'd be surprised. Knowing that I need my identification documents and I need to be able to explain why the address might be different from where I'm currently living, that's something that will help you ease through the process, and you won't have to be tight as to say, well, why does that matter? Well, it matters, okay? Because it really ties to your credit report. Now, second thing, a document that's going to be synonymous is your pay stubs, how you're getting paid. And depending on your interval, you might get paid weekly. So that's going to be your most recent 4 pay stubs. Semi-monthly, it'll be 2. Monthly, it'll be 1. Or bi-weekly, it could be 2 or 3 depending on the month, right? And you want to go and download your pay stub, the entire pay stub. So you got to get comfortable with your HR department. And if they've outsourced that function, which a lot of companies have done today, The Work Number, Thomas & Co., there's a lot of third-party verifiers. But this is information that you want to become intimate with so that the loan officer or whoever is going to do your pre-approval can do so properly. And how can you be pre-approved if no one validates your income? Think about it, right? So to his point, you're getting a letter in the mail saying you're approved for a home and nobody looked at anything. It's not to knock you because you don't understand. It's so that we can educate like he and I are doing. But again, this is a process. So we're walking you through. So that's the income. Get acquainted with your HR department because your lender more than likely will have to validate your income. There's a difference between pre-approved and pre-qualified. Okay. A full approval. That's what you want. The third thing is going to be your job history. I run into this a lot, and a lot of applicants get frustrated because we need to have a chronological history that covers the most recent 2 years up into the time that you apply of either the employer that you worked at or all of the employers. Because if you have job gaps, that potentially could have or cause a problem. So we don't know that as a loan officer. That's your information. And a lot of you guys don't know that. Now is a good time to start getting that stuff together. Get out a piece of paper if you think you want to buy. And okay, where have I worked over the last 2 years? And you want the company name, the physical address of the company, right? Or if you have a corporate office in a major city, but in your city where you're working, You want to be able to have that address, a good phone number to the HR department, your start date, your end date, and the title held. All of this is a part of the application, and it's got the information will be gathered at some point in time. But because what the gentleman is saying, a lot of people just want to get you in the door. So they try to tell you what you want to hear. And what I'm telling you is to understand this process and have all these things up front. And when you are an informed buyer, that's when you're going to get the best terms for you and your family and the best process. Your jobs for the most recent 2 years and the corresponding W-2s. Now, if you're self-employed, here's the deal, self-employed people. Your taxes have to have been filed. And you don't get the benefit of using the gross income. You're going to use the taxable income, the amount of money that you pay taxes on. Some of you guys might not even have any income. And this is where the expertise, the provenance of the lender that you know, like, and trust helps guide you through that, because there's only so much that you could do on a YouTube video. So that's a whole nother line that we could go on, but I want to stay on point with what we're doing. We got the identification. We have the pay stubs, right? And the work history. Talked about self-employment and the tax returns being filed and what income we could use, right? And for self-employed, you got to have the actual tax returns in your Schedule C's or whatever structure you have. If you're a S Corp or a C Corp, so on and so forth, you might have K1s or 1099s, right? But if you have those things, and then the last thing I will say, and we'll move on, if you are on fixed income, Social Security, you're getting retirement, VA disability, VA retirement, you want the annual award letters showing, hey, how much you get, because some of those incomes may be able to be grossed up. So not only submitting that online application, but having those documents so that they could be vetted properly. Here's the deal. You don't want to go out and look at a home and be all excited only to find out on the back end that you don't qualify. Let's continue.
Do you have any money? No. So what makes you think you can be able to buy a home when you don't have any money? And they're like, well, we're first-time home buyers. Aren't there any programs? Yeah. First-time home buyer is a marketing tool. It doesn't give you some special designation that allows for you to get something for free. It just doesn't work that way. So just because you're a first-time homeowner or a home buyer, okay, that allows you to buy a home with an FHA loan with 3.5% down payment. There are some other programs, basically from different lenders for first-time home buyers, which is nothing more than an FHA program, with a little bit of leniency maybe, or you're going to be applying for down payment assistance.
Let me help you out. The main thing that he said, it's a marketing term. Folks are trying to make you feel good. But here's the deal. First-time home buyer, by definition, is anyone who has not had interest in a home in the most recent 3 years. And that's why we look at your tax returns that you filed with the IRS. We're going to pull tax transcripts to make sure you don't have any mortgage interest. So it's a marketing term to make you feel good. Now, there are homes for heroes, police officers, firefighters, nurses, teachers. Think about it for a minute. Why do we want to make those folks feel good? And I'm sure you guys are great people. But here's the deal. The deal is this. The income is steady. You know what it is. And those are the salt of the earth type people. Should be easy to help those folks qualify. And the programs that are set up for those folks and first-time home buyers, what a lot of people don't realize is this. The folks that are going to get the best down payment assistance programs, and those are grants. Grant means free money. And there's not a lot of grants floating around in the environment at this time, the recording of this video, and I lend nationwide, okay? But those folks are the people that are going to be at the bottom. They make the least amount of money. And if you think about the spirit of helping those folks out, they wouldn't be able to get onto the housing ladder otherwise. They also have thresholds, ceilings on the amount of home that you can buy. So a lot of you guys out there are savvy and you make a lot of money. And it's funny to me, but everybody's making $200,000-$300,000 wants grants. So that goes to show you everybody likes free money, but you're not going to get it.
So most down payment assistance programs go like this. The first or the total loan interest rate is going to be dictated by the program. So if they're saying they're giving you 3, 4, or 5% in down payment assistance, another thing you have to realize is this. Those programs have employees and administrative cost. So that 5% is really going to be 5% less whatever the fees and costs are for the said program. So when you guys are talking to these lenders and things of that nature, these are ways that you know if they know what they're talking about, or if they're like the bank that Brad just mentioned and just, they just shooting out leads, trying to get people in the door, and then they'll figure it out later. This process you don't want to figure out later, just like you don't want to go into a home with no money. These are some of the nuances to the down payment assistance programs that a lot of people don't realize of down payment assistance programs when it's the right fit. And so you have to understand that and look at the options and understand the total picture with them. And the third thing to down payment assistance that really is a deal killer in a lot of cases, especially if you're well qualified and you have money. Okay, the traditional route is the better way to go, but these programs are going to lock you in to that interest rate that I mentioned for a period of time. Texas has some of the shorter period times, but 3 years, 36 months. So if you get one that's 36 months or less, it's not a bad look. But what happens if interest rates go from, you do the program at 6.5%, 7% because you didn't have any money. And in that 3 years, the rates drop to 2%, which I don't think they're going to do. But I'm just giving an example. Well, you're going to want to refinance. Well, now you got to pay back all that money that they supposedly gave to you, and you're paying a higher interest rate. So it's always best to have your own money. But if you don't, it's better to use those type of programs and get onto the housing ladder, because the longer you wait, as you guys have seen and well know, prices continue to rise. So hopefully all that makes sense. Let's continue.
With a particular credit score, if you have 620 or better, typically you're able to qualify for down payment assistance. There are some programs which I just spoke with a lender recently with a 600, but you still have to have money. So buying a house, you're going to need money. You're going to need to pay for your home inspection. You're going to need to pay your earnest money. In Texas, we have an option fee. There's also the appraisal. You pay these things up front. So if you don't have any money, you're not getting into a house. Plus, you need to have at least 1 to 2 months of reserves in your account. You can't just be out here trying to buy a house with no money. So anybody that's out here telling you can buy a house with no money and they did that, you need to understand their situation and how they're able to accomplish that, because that doesn't apply to everyone. And of course, if you're in a VA situation, you don't have a down payment, but you still have closing costs. So let's get this notion out of your head that you don't need money to buy a home. Having money and not needing to use it is different than I don't have any money and I need money.
Man, salute and shout out to you. There's still people out here that are doing the job properly. So to the young lady and to the gentleman, spot on. I agree with him 100%. To his last point, it's a difference to have the money and not need it, because in the environment that you're in now, especially if you're well qualified, especially if you've been pre-approved properly and you're going out and shopping, there's not a lot of competition. Therefore, sellers are more apt to pay towards closing costs. And when you have good realtors like the two that I just mentioned that are really looking out for you and not just trying to make a commission, those are the same type of people, in my experience, that are able to negotiate seller concessions on the behalf of their buyers when possible. I'm not saying it's a guarantee. So all of those things are a win-win. But here's the deal, guys. You can do what you want to do. I'm just trying to keep you off of TikTok, Instagram, or Facebook complaining and talking about, I hate my house and I shouldn't have did it, or having buyer's remorse. All of those things happen when you go into the largest debt that most adults will get into, and that's your home, and turn that good situation into a bad one because you jump the line. If you want to find out how to get onto the property ladder properly, and you like what I'm saying, I'd like to have a conversation with you to see if we can move further to help you reach your goals. I'm a lender. My NMLS license number is 180100. Been doing this over 20 years, and I would love to have that conversation. My contact information is in the top pinned comment and the description of this video. If you're not ready, watch these 2 videos here because they'll help you on your journey as you continue to educate yourself until the time that you're ready to reach out to that lender that you know, like, and trust. As I always say, guys, let's be good to one another. Let us let grace abound. Y'all stay blessed. Indeed.